Hello everyone, welcome to another weekly market review. It is the 21st of June 2021. I've recorded the entire review and just saw that there's a bit of an audio issue and still a lot of alpha in there, guys. Just a bit of a robotic voice for this week. Have a great week. Total market cap on the weekly time frame. We made a move from the previous range highs back near the range lows. No close below support. Let's look at the 3-day. So on the 3-day time frame, you can see we were holding this 3-day block, and this is what I had mentioned on my Twitter. It's very clean what the total market cap has done. Strong impulse and a tight consolidation. So the consolidation is very clean 3-day level here and this 3-day block, and you can see the 3-day time frame. Now we have another hint towards where potentially the market could be going, because you can see all the way in May we never had a 3-day close below. So this can be one of the reasons for getting the kind of reaction we got on this Monday. But still, let's just dive in a little closer. So on the daily time frame, weekly level is still holding. We have a couple of levels, significant levels from bearish Gartley and getting quite close to the second take profit level. And what I would say is just look at the daily, guys, okay? I mean, what has happened right now, what I can see in the morning is we getting that bearish sentiment because of the rejection we've gotten in the morning. Still, what I would say is we have hints of weakness, but it is still a range. So until it is proven otherwise, can we fake back down and make another move up? Yes, we can. The probability of it is starting to reduce now. See, we've had one defend, two defense, 3, 4. This is the 5th test of support. So each time the support is getting tested, the probability of it holding is reducing. Would I still take profit here? Yes, I would still take profit in this zone, because until it proves itself, it's still a range. Will I close out my entire position? No, I would not. So a lot of people get confused about how to play this range. What I would say is that you should at least be playing it agnostically. What that means is without the bias of which way it will break out. You can have a bias, and this is somebody asked me on my Twitter how I deal with that bias. I deal with it in terms of my risk and position size. So each time we are heading to resistance, I am looking for a potential breakdown, so it reflects in my position size. That I would be looking to short and take more risk on my shorts. And my longs, a lot of times, at least in the middle when it was a bit more noisy, they were more neutral, which means when price was going up, I wasn't making too much, so it was just a smaller long. But whenever I'm getting the chance, my position size for the downside is always on the heavier side. And even if I would be taking profits, I would be managing my risk from a certain level to get that continuation at some point. And if it doesn't come, it doesn't come. There is still a decent probability that price can hold another time. If there's too much fear in the market, price can hold another time. Get another move till anywhere near the mid-range, and then make another move down. And this, in fact, a structure like this would be more viable. It would be more stable to be able to break a major support. We have been going down almost straight down for the last 6 to 7 days. We got that reaction last night, but outside of that, this takes a lot of strength, by the pairs. So they are going to be slightly weak in this zone. So even if they do end up breaking support, I think they can still be a probability and should not be ruled out to get another bounce. But to get that rejection from lower rather than getting all the way back up to the range. If we do get a sign like this, I think this would be quite bearish, rather than just making this very clean range that we have been making on the total market cap. But also, just in terms of the other way to measure this weakness, is just look at these reactions, okay, from wherever we broke down. The first time price came here, we got a reaction, 57% move. The second time we came here, we got a 47% move. The third time we came here, we got a 27% move. The fourth time we came here, we got a 20% move. Price came back down, but bears didn't have the strength, and we got another 20% move. So you can see how the reactions, it's like that bouncing ball effect, that is what's going on. So if we get another breakdown and a 15-20% move up, start getting a rejection there, I mean, that would be significantly bearish, and I would be more confident in assuming, it would still be an assumption, but I would still be more confident in assuming that this bias and the range is finally ready to resolve to the downside. We have hints. The 3-day close has given us a hint, and for the upside, it is still very, very clear. Just look at it on the 3-day time frame. This is such a strong level, guys. Such a clean level on the 3-day time frame. For the upside, it is really, really clear. You need this. You need price to start closing above this. On the 3-day, and that is a tough one. But what I would say is, even if it is on the daily and the 12-hour, if we start finding support above this level, and we start closing above this weekly level, then we can say that yes, price is going to resolve higher above this range, and we are finding acceptance above a key resistance. Until then, for now, we are finding acceptance below a key support. So bias continues to remain to the downside. Is Bitcoin on the weekly time frame. So what we got last week was this close above the weekly level, found absolutely no acceptance there. There's a clearer picture on the lower time frames on what happened here, but outside of that, we had a bearish engulfing on the weekly time frame. Of course, what happens this week should give us confirmation whether this is valid or not, but that's what we have on BTC. On the daily, we've had about 5 straight days down and got a weak reaction up, and for now we are following down. Also, another thing, guys, when Monday just starts bearish, it's not that positive a sign if you are a bear, because you want price to build some kind of a range. And last week I spoke about the potential for Monday's range, and this is exactly the plan that played out, guys. And you have to understand, when we are in range plays, this is in fact what I would say on the edge of a range. When we get a swing failure pattern, I'm just gonna hide these now. We can see how well that played out. We had a Monday's range right on top of the Bitcoin range, and we got a swing failure pattern, right up here. So how we actually play a swing failure pattern is either you're right there, to catch it, which means that price does move up, you don't need to knife catch it, but on a very low time frame, you will see that strong volume and rejection coming in, and you can be part of that volume with very tight risk management. You can catch that. And the second way you can catch it is that you allow for the swing failure pattern to play out, and this doesn't always happen, so you have to see it is subjective, because a lot of times we get the swing failure pattern and you will get continuation in price. So this is subjective, this is not an objective experience, but if you do end up still getting a retrace on any reasonable time frame, you can end up managing your risk from that swing failure pattern. What else we were looking for was a confirmation. We look at it on the 4-hour. So we got a 4-hour close below the weekly open. This is what was suggesting, yes, there is potential for weakness. You got another retrace up from there. So the thing is, in the end, when you do get a swing failure pattern, that becomes the point of negation. So whatever kind of position you're building, this is where you're managing your risk from. So once a swing failure pattern on a range high has been created, what you have for yourself is a potential bias. You are potentially now biased to for price to be moving in the opposite direction. So you need to build a position which is as close to your point of negation. You're getting a move all the way up till here. You can manage your risk from this point. And what I did tell you is that there was potential to get another swing failure pattern. That is why the actual point of negation ended up being price finding support up here. Okay, so if you're managing it, and the thing is risk management, we will talk about it in V2, because there are a lot of nuances to it. It's not very blanket and broad scaped. There are many different profitable strategies that you can employ to a move like this. But what I will tell you is that this was the first easy shot that Bitcoin gave, all the way over the last 20 to 25 days. Why? Because we did get that swing failure pattern at range highs. So when you get that, guys, this is a very great place to manage risk. It gives you a lot of probability which is in your side. And also we got very good volume on this rejection. That's what I mentioned in the Telegram advice. There's very good sell volume on that rejection as well. So a genuine swing failure pattern, and we've gotten great returns from that. Already prices down nearly 20%, and there is still potential for some more. And if we look at it otherwise, price is still very much in a range, and yearly open is still quite some, almost 15% away. What I would say is, considering the kind of price action and sentiment we are finding, my stance remains the same. It is still in a range until it breaks. So what I spoke about in the total market cap is something that we should be watching out for, because what I can see is now the sentiment is starting to get bearish. When the sentiment starts to get bearish in a range, there is always potential, to get another squeeze. So we can still come all the way down, but until price confirms weakness down here and starts to break below this, the likelihood of doing that is lower, especially when the sentiment becomes like that. So still I would say there is potential possibility, guys, to get another move, somewhere around close to the monthly open. We start getting a rejection around here, the weekly level, the 0.75. You can see, this is a significant level. So if we start to get a rejection around here and we don't visit range highs, I would say that would end up being a really good place to manage risk. But we cannot project this yet because we don't know where we have bottomed out. Is it right here where we already are, or are we going to come slightly lower, and how deep we're going to go? After we get this entire move down, we can make a projection, but I would say this is a good zone, where we have the anchored VWAPs of this range along with the monthly open. This would become a good zone if we are to get another squeeze. We start moving back above this, then this is very clearly still in a range and not ready to go down. But the 3-day close on the total market cap has hinted to us that we have this probability on this move down, that there is extra weakness in the market. The support that held for more than a month and a month is not holding on a higher time frame. So that is giving us a hint that we can get potentially something like this, and this would be more viable, for a move down, because all the way down, straight down after a move like this into major support, it is still major. It may be the 4th time we are testing it, but it is still major support. The probability slightly reduces, to break straight through, because you can see we are not in that impulsive phase of the market. Right now when we are in this range, price needs compression to move out of a range. So that compression, if it happens closer to the bottom, it will be significant for us to increase the probability of breaking below. That is what Bitcoin's plan should be for now. We're still getting close to the 0.25 of the range. This has all been a great place to be taking profit, and it should still remain so until it is proven otherwise. Great place to take profit, great place to scalp longs and even consider potential swing long positions. But just understand, this is where you need to be taking off, not adding risk over here. And basically, when the market does get bearish, that's what happens, guys. People are bullish up here and then they're going to be bearish down here. So it makes very efficient for the market to do something like this. So just know that this is where we start to take off risk. Look for strong odds and look for, if BTC is strong and all BTC is weak, then just scalp BTC to the upside. Protect your gains and remain agnostic till the range proves itself. For alts against BTC, we are looking at the DeFi index, because that's what we've been looking at over the last couple of weeks. So we've got that impulse down, but it's pretty much been a sideways week for alts against BTC, while BTC had a strong move down. So essentially the weaker alts had a stronger move down than BTC, but alts have been sideways at support. And if this does break down, we can expect it to be impulsive and violent. And what I would assume is that if BTC gets that potential short squeeze, this remains flat, and once we do get that potential move down, alts could start outperforming to the downside. But for now, for specifically DeFi, this is nearly a 5-month range, so quite impressive. If this is a compression, it's quite impressive. The fake out that we have gotten, the deviation, 2 deviations to the top side, we have 1 deviation to the downside as well. So currently no confirmations on it, but really spending a lot of time and compressing near the bottom of the range. I would say this is not so positive if you're bullish, but yet we are not confirming the direction as of now. So just keep a lookout for it. That is what my assumption. Again, this is not proven, but that's what my assumption is, that if Bitcoin does make a move like the one that we projected, alts will outperform even to the downside. Because that's what they always do. It's just high beta for BTC. For traditional markets, we're going to look at some very significant data. We're looking at the triple witching week and week. This is for the Dow. All the point changes since 1991. So what is triple witching? It's the expiration of stock options, stock index futures, and stock index options. This happens once every quarter. The third Friday of the end of every quarter, we get this expiry, and what it brings to the market is a lot of volatility, but also in terms of all the settlements that take place, it does bring out statistics which end up being significant over a long period of time. So we have nearly 30 years of data, and what we can see is, what we are interested in right now is the expiration of the second quarter. Alright, so what we have is the week after. This is the week that we are in. After the expiration of the second quarter, you can see, what do we have here? We have 26 down weeks and 4 up weeks. Okay, this is very significant statistic, guys. The week after triple witching on the second quarter over the last 30 years has been the most bearish week for the traditional markets, over the last 30 years. So this is not a week, and the thing is, we are not the only ones with this statistic, but are people going to fade this because a majority of the stock market is bearish? I don't think so. I don't think it makes sense to be having to fade it. Out of these 4 weeks, you look at this week, this is just 10 points on the Dow. It's basically flat. 75 points on the Dow and 95. This is not big gains, guys. I mean, it's it's leaning towards either being flat or being a bearish week, and this is just the seasonality and the statistics that prove to us that something like this is what is potentially possible. So just keep this in mind. This is the statistics are in the favor of the bears. If that is so, if price is flat or if price is tending towards moving down, even the seasonality, I showed you a seasonality chart for Bitcoin, I showed you a seasonality chart for the traditional markets in the last review. So everything suggests this is the time to not, first of all, be aggressive, but also to support what we have. This is just added confluence towards what price is showing us, and that's how statistics need to be used. You can't look at this and just go all in short, so that's not how statistics work, but they are supporting what we are thinking. And this is how significant events need to be used. We need data, and we need we need significant amount of data. And this is an anomaly. When you have 26 down weeks, 4 up weeks over the last 30 years, these are the anomalies you're looking to trade in markets, and there's bigger money than what all of us combined can do, who are looking at the same thing and looking to trade this. There's not so many weeks where you get an opportunity like that. So just understand this, and also it's a good lesson for you to understand how we use statistics and how that adds to our confluence. So we're looking at the dollar index, and this is on the bi-weekly time frame. Very clear channel, very strong support for the dollar index, and you can see it has held. We have been in this range on the dollar for nearly 200 days. I had projected and looked at the previous strong downtrends that we've had on the dollar, and near to 200 days was the longest kind of consolidation we have gotten. What is very interesting is that structure has really shifted after either that's a squeeze or a move, guys. We have to see and understand. You can see there's no wicks above it, so it's not exactly completely bullish. If we have a close below the previous 2 weekly close, the bi-weekly close, we've also gotten a close below the anchored VWAPs from the September move down. So it's really interesting, and this is triggered by the hawkish comments by the Fed, because inflation has become apparent after we've gotten the numbers. So even just a suggestion that in the near future rates are going to be rising, that has led to this. And the thing is that it's been such a crowded trade. Even the taxi driver understands what inflation can do. I would say there was just so much crowd in this trade that a move and a potential move like this was always on the cards. So much weakness down here, refusal to break support. And this is the thing, guys, when we are in ranges, even though this is a much more complex asset, I would say that this is the asset and this is the narrative that has been driving the markets over the last 14 to 15 months. It is all about the dollar. Everything has been about this chart and everything else getting repriced in relation to it. You've heard me say it before, and I'm just repeating myself here because I really need to. This is a very important chart, and it's quite important to see what happens here, because if the dollar does end up getting some kind of continuation, then we will get that risk of behavior that the market is suggesting. So extremely essential and extremely important to keep an eye on this. And just structurally, for now, this would look like it would have changed, because it's making that double bottom kind of structure. And you can see each time the dollar made these strong moves down, we did not find any structures like this. So there would be a suggestion that there is some other things with the dynamics of the market, and this is not ready to be in that powerful downtrend as of now, where everything gets repriced according to it. So we have to see, and for now still within a range, but is suggesting some form of potential strength. So we have to see what happens from here. The next uh, resistance of interest is up here, the anchored VWAP, along with the level of breakdown that we had below. So this is the next area of interest, but more importantly, it is this quarterly level up here. A move up here would decimate, the move in commodities quite significantly, and also affect risk on markets, and it will of course affect cryptocurrencies as well. So this is something you really need to keep a lookout for. As of now, there is no essential need to have a bias, but do understand that there is some signs of weakness, but we have more signs of significant potential strength. And this is all, I mean, it's not to do with the mechanics, guys. If you're like, oh, there's so much supply getting printed, this is reflecting there could be some demand for that supply. That if prices stabilizing here, there could be demand for that supply. No matter how much dollar is printed, it's still the petrodollar. Other countries cannot print so much fiat because there isn't as much demand as there is for the dollar. But what we know for the future is more stimulus is coming. So that is why this could just be a way to get everybody who has been crowded in this trade, get them out. And let's see, if you start getting a bit of a breakdown, break below this anchored VWAP, start finding resistance at this anchored VWAP band, then we can know we're ready to trade this back down to at least the bottom of the channel. And if the channel is breaking, that is giving us another suggestion of weakness. But more importantly, we need this yearly level to break for the next big impulse on this move. And to the upside, I would say this is the quarterly level, and right here is what we need to break for any impulse to the upside. But as of now, two areas of interest for resistance. One is up here, the anchored VWAP. Second is the quarterly level. If we just start to grind and break below this, then we can trade this back down to the yearly level, which means this correction in the commodities would be a buy, and we should anyway start to look at setups over there and find potential areas of support. For our commodities, we're just looking at gold, because it has quite a clean chart, reflects for us what may be going on over here. So in terms of market structure, guys, this was the high that made this low. So what we've done is we've made a higher high, and we have to see where the potential for this higher low is. Let me just pull out a fib. This looks like it could be a golden pocket. Yeah, so this is a golden pocket right at support. But we have a slight hint here, guys. Look at this. Okay, this is the quarterly level. More than level, with commodities as well, can be a bit of a zone, but we closed below this quarterly level. So with caution and considering the magnitude of the move, you have to be cautious, but it is still a significant level where there is potential to find support. I would say that we can look for potential upside from here, and this would ideally manifest because it's very inversely correlated to the dollar right now. If that starts grinding and we get that move below the anchored VWAP on the dollar, you may end up getting that move on gold. But if the dollar continues to rise, this is the next level that we should be watching. There's another significant weekly level up here. I should draw that out because there is still potential to catch this, and this likely be the 786. So if that is a deeper retrace, two levels of interest for gold, we have to see where we get a reaction from. But a lot of commodities have been going straight up. We'll just quickly let's look at copper for a second. So just look at this move, guys. So all the way since March, completely a lack of any significant correction. Look at it on the monthly time frame. It's pretty much just a couple of consolidations, but no actual correction. So it just gets a bit overcrowded. Copper was at all-time highs, and look at this. It's a big impulse. So a couple of months of correction and sideways to find support at a significant level isn't such a bad play. And if we pull out a fib for this entire move, Even a move to this quarterly level 3.7 would still be a very bullish retrace with a potential of continuation. So just keep a lookout on that. It's a very strong move, but really needed a higher time frame breather on this. So couple of levels of interest for gold as well, and I'm giving you a significant level for copper as well. This 3.78. Just keep some alerts below this consolidation, guys, and see what happens to price once we do get here. There's some confluence with this channel right here, so if we can get, say, middle of July, end of July, a move up to here with some basing price action, it would be quite a nice play to play for this big continuation to this 14-month impulse.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!